Hello everyone and welcome back to a new video on the channel. Now in this video we are going to be doing an update on the ISA. I have made a couple of changes here, so we're going to be covering those in this video. But with that being said, I would appreciate a thumbs up and subscribe if you haven't already. And with that being said, let's jump into it. So right now you can see we are up around 0.4% today. If we go to the portfolio, you can see the value is currently £20,647, and that is split down. I've got 1,300 in cash, which I will get deployed over the next few days as we start to see how the market does. Okay, I don't like having cash sat here. I really don't. I want to get this deployed. We currently have, I think, let's see, 19.3k in investments. I would again like to see that deployed so we don't have any cash at all. And how this is currently being broken down is, if you don't know, we have three different portfolios here. We have the long-term growth, which is the bulk of my investments here. That's currently up 4.8%. We are down 6% in the past month. So a lot of those have been wiped out. You can see we've got the FTSE All World here. We have the S&P 500. And I've now switched things out. So before we had iShares Physical Gold. And I've pulled that out and added the FTSE Emerging Markets at 10% of the portfolio value. So obviously it's going to take quite a bit of time to get to the 10%. I would need to add around 1.6k for this to actually be around that. I'm not going to sell this gold yet. I'm just going to hold on to it. I think this is fine. I'm happy with this. I'm not going to rebalance this because it would sell my gold, it would sell my All World, and then it would basically buy a bunch of the emerging markets. So I'm not going to do that, but I'm happy with this going forward. I just wanted a bit more exposure outside of the US, because obviously the All World does have, as it says, the All World, and that is weighted, a lot of that, I think 60% of this is weighted towards America anyway. So for a lot of people, it doesn't make sense to have both. But I like having both. I like a bit more exposure to the US as well. And then we have an emerging markets ETF too, just to have a bit more exposure to, again, emerging markets. So that is how this portfolio is broken down. You can see on the All World here, we've got about £9,200 in here. That is up 2.38%. And the S&P is up around 7%. Obviously, we have had a crazy month being down massively. But that is all good. 1 year we're up, and max we are up anyway. So that is that. We then have the Dividend ETF pie, which is what it says on the tin. It is Dividend ETFs. So I have made some changes. I am 24. So a lot of people think, why the hell are you investing in dividends? And it is a fair question. But I like, because as I sort of, in the next 20 years or so, I know it's a very long way away at the moment, but I would like to start drawing an income from these positions. So I want to have dividends specifically in the portfolio here. So in the dividend ETF, we currently have a few different changes here. I have gone ahead and sort of weighted some of these. So the FTSE All World dividend yield was before 35%. That is now 30%. The City of London Investment Trust is 20%. JP Morgan Nasdaq Equity Premium Income is 20%. And then we have iShares UK Dividend at 10%, L&G Global Quality Dividends at 10%, and VanEck Morningstar Developed Markets Dividend Leaders at 10%. So that is how this portfolio breaks down. I have just added this L&G Global Quality Dividends Fund, which, by the way, shout out to Tom. This is where I got this stock from, this ETF from. It's very new. It only came out around a month ago, is that? Yeah, about a month ago. It's currently down 7% since it started, but that's okay. And we'll have a look into this a bit more detail in just a second here. But that is how this dividend ETF portfolio is looking. And then we have our dividend individual pie, which again is split up over a few different companies. I just removed two stocks. I removed Standard Life and Taylor Wimpey. Now, these stocks are pretty quality companies. Standard Life PLC operates in the long-term savings and retirement business in Europe. So it's essentially a pension fund. And then we have Taylor Wimpey, which is obviously a building/development company. Both of these are very high dividend yields. Taylor Wimpey has a 10.7% yield, and Standard Life has a 8.13% yield. However, I just thought for me, like I don't really care to own a pension fund or a real estate company, or a building company, considering I already have Realty Income, I already have Main Street Capital. Both of these are real estate, albeit in the US. But still, we are quite heavily weighted already, around 35% to real estate. So I have added Altria Group, which is a 6.31% dividend yield. And this is basically a manufacturing company, a tobacco manufacturing company. And then we have added Coca-Cola, which goes without saying of what Coke is. So that's how we've broken this down. So I've removed Standard Life and Taylor Wimpey and added Coke and Altria. And that is essentially how this breaks down. So yeah, that is pretty much it, to be honest. That is the changes that I have made. So within my dividend individual pie right now, we're holding Realty Income, Legal and General, Main Street Capital, Altria, Aviva, BP, British American Tobacco, and Coca-Cola. We also have Standard Life and Taylor Wimpey, but I'm not buying them anymore, nor am I going to sell them. I'm just going to keep them. So far, we've made a whopping £2 in dividends from our individual pie, and then from the dividend ETFs, we made a whopping 62 pence. With around $2,000 total in these. So, and I'm going to change. I'm sure that this is probably going to change over time. Like, I'm definitely not just going to be holding these. Things will change as we move around and as I change, and as I want to hold different companies and whatnot. But for now, I think this is pretty solid. So what I'm going to do is I'm going to go ahead and add another £50 to each, just to basically get those new investments going. So this is going to buy £50 of Legal and General quality dividends. Just go ahead and buy that. And then we're also going to buy another £50 worth in the dividend individual. I did this earlier, but just to get a little bit more sort of exposure and get those weightings up a little bit. And that is going to be pretty much it. I think there's not really too much to do. Like these two here, it's not going to take me long to get these weightings back in. Like I could probably rebalance this. Let's see. It's going to cost me what? Let's see here. Yeah, like £100 probably, or something like that. Let's check. If I do 150, yeah, it's going to basically rebalance this for me if I just add another £100 to this. I will pretty much be there. And then again, same with the dividend individual, £100 will get me rebalanced. So that is how this current portfolio looks. I think I did do a buy today of £150 in the long-term growth. I did add another 500 of cash today. You can see here that I've only put in 4,800 this year. And I'm going to try and get some things. I'm going to get some more funds into the portfolio. There's some things that have come up over the past week, bit of personal information, but I've just had to buy a new engine for one of the cars, for one of my car rentals, and also I've had to replace my fence in the back garden. So a very expensive week. So that takes away around $5,000 from me being able to put into here, unfortunately. But look, life happens, and that's why there's balance. You have to balance. Like I can't not have a fence or an engine in the car, so unfortunately some things have to take priority or have to take first dibs. So that's how the portfolio looks. It wouldn't be a bad idea to chuck all of this into the portfolio now, with us being down 6% in the past month. And that's from nothing too crazy. Like obviously about 10 days ago we had more in the portfolio than we have now, and I've added more money since then. And again, that's just the market doing the market's thing. Year to date, we're down 4.1%. So it's a good time to buy. Obviously, there is a lot of stuff going on right now in the world. So, I'm not going or lump sumping money into the market because, again, I'm not trying to time the market. I just think if I can get a better entry, then great, And I think the stock market is probably going to continue to take a bit of a dump. a bit sideways, a bit down, a bit up, depending on what is being said, if you catch my drift. So with that being said, that is going to be it for this video. If you have enjoyed, make sure you do like, subscribe if you are new. And yeah, that is pretty much it for this video. I think I will, so just one more bit here. I think I will start a portfolio of high yield ETFs. Now, I'm not going to do anything too crazy yet, but something along these lines. Okay, now obviously these income shares, right, they are obviously down massively. They pay a huge dividend yield, okay, but the NAV just declines. Like this Tesla one, that is down 50% since it launched. Now, if you were in from day one, which was July 2 years ago almost, if you were in this since launch, would you have broken even? Well, probably not, because you were buying crazy high. But if you were buying along these lines, then potentially, you could be breaking even. But I don't like these charts. I do like JEQP. I think this is a great fund. Yeah, this has been quality since it launched, to be honest. But these like RevTechs and the yield and the income shares, I need to do some more research into it. I know that the MicroStrategy STRC just launched over on here, which is a Bitcoin income fund. It pays around 1% a month dividends. So this could be a part of it, but this is a tangent anyway. That's going to be it for the video. I know I didn't cover this fund, but essentially it's a legal and general global quality dividends. It says what it does on the tin. It's just tracking quality income, dividend stocks, and pays them out as a dividend every month. This is a monthly payer. So yeah, that's going to be it for the video. Thank you for watching. Hope you enjoyed. Subscribe if you are new, and I'll see you on the next one. Peace.